Hey everyone, and welcome back. On my community board recently, I asked you guys if you had any questions related to investing for me, and you guys came through. There were a ton of questions, so many that I'm not only going to be doing today's Q&A video, but I'm going to do another one next week while I'm taking a short break away from YouTube. So if you asked a question on that board, I'm going to try and get to as many as possible, but there probably still are too many for me to get through. I'm going to do my best in today's video. And to help me get through this mountain of Q&A questions, I'm going to need a little bit of help from my sidekick, Lucy. Lucy, Luce, where are you hiding? Legitimately have no idea where. Come here, Luce. Do you want to be in the video? Come on. You can be in the video. Come on. No, Lucy, it's my chair. It's my chair. All right. Now we're ready to get into some questions. If you enjoy these kinds of videos, make sure you leave a like. Let me know down in the comment section below. But with that said, let's jump into some questions. The first question here is from Theo. Congratulations on the success of the channel. Do you make any personal contact with any of the companies you've invested in or thinking of investing in to discuss their progress in any way? Thanks. I think that's a really good question. No, that's not something I've ever done before. I've never actually reached out. I mean, actually, that's not true. I have tried and reached out to some of the management team for some of the companies that I was interested in investing in. I just never really heard back from them. So I guess maybe at some point in the future, maybe if my channel was substantially larger, then that might be a benefit that I could receive from, having a large audience. Maybe then I could get some interviews with some of these CEOs and that sort of thing. And look, honestly, it's probably something I can do right now if I put a little bit more effort in. But no, it's not something that I've done so far. Hi, Hamish. Thanks for all your hard work. Happy Christmas and New Year to you. Happy Christmas. Merry Christmas to you too. My question revolves around the Bryce Spawner concept. Any thoughts in general or on this topic specifically? Yeah, I don't personally seek out spawners specifically. I think Bryce's done a lot of work in that area looking for companies that have this amazing ability to produce massive amounts of cash flow and reinvest that and spawn new businesses and really become a conglomerate of different types of companies. I've never specifically sought out these businesses, but a lot of the time, if you do have a great management team and you're investing in a business or you're looking at a business that produces a significant amount of cash flow, a lot of the time that is just what happens to those businesses. Or I shouldn't say a lot of the time, it's extremely rare. But when you are looking at those types of businesses, that tends to be what you see. And ultimately, it really comes down to looking for businesses that have strong management teams with a track record of being able to deliver high returns on their invested capital, and whether that's in the form of spawning new businesses or reinvesting back into their same business to grow their existing business. Either way, I'm happy to invest in companies that can do that. The next question here from Ben is, congratulations on 2021. Would you consider cutting your cyclical holdings like Thor, since Thor's current backlog won't be sustainable and current success is probably cutting into future gains for the company? How will you play it? Firstly, on the point of their current backlog not, being sustainable, that's absolutely true. I'm even surprised that their current backlog, which is now $18 billion, which is a crazy amount of money, I'm even surprised that it's lasted for this long. Honestly, I thought there would have already been a cut down. So I'm surprised that the kind of short-term trend of people buying and investing in an RV or a caravan and spending more time traveling within the country, I'm surprised that has lasted for so long. And then in terms of whether I would cut this investment and look for something else, that's just not really the way that I go about investing. I like to buy and hold great businesses over the long term, and the only exception to that rule is if something fundamentally changes in the business or the stock is no longer, or if it gets massively overvalued, right? And neither of those things I think is the case for Thor Industries. I think the business is certainly going through a short-term burst, but that's not driving the stock price to massive overvalued levels. The stock price is actually very, very undervalued, I think. Well, maybe not undervalued enough for me to add more, but I certainly think that it could go a lot higher considering how high it went all the way back in 2017 when their revenue was a fraction really of what it will be over the next couple of years. The way I simply go about investing in these businesses is I'm buy and hold, and I will stockpile more if they get extremely cheap. So if Thor Industries drops another 50%, or maybe even it would have to be less than that, depending on whatever my valuation is for it, then I would add more to it. But besides that, I just want to compound and grow and stockpile ownership in the business. And that's ultimately what I want to do. And unless something fundamentally changes about the business, then that's what I will continue to do. Most of the time, I'm doing absolutely nothing with the positions in my portfolio. The next question here is, we talk about holding stocks for the long term, but could you speak more to when we would decide to sell if you had held the stock for over 5 years? Yeah, so there's really 4 key reasons why I would want to sell a stock. And it's the exact same 4 key pillars that make me want to get into a stock in the first place. It's kind of like the opposite. So the 4 key pillars of wanting to invest in a business is, it's one we deeply understand, so that's circle of competence, one that has a deep and sustainable competitive advantage, so an economic moat, one that has a powerful and trustworthy management team, and then the stock is at an appropriate price. So if any of those 4 things is violated, that's when I would want to sell a stock. So how would that look? It might be the first one, which is circle of competence. The business might be a spawner, for example, and they might spawn a new business that becomes the majority of the company, or 50% or 40% of the company, and it might be a business you don't understand. And that might mean that you now no longer understand a substantial and important part of that business. That would mean you would no longer want to hold it. The same thing applies for whether it's lost its competitive advantage, maybe the management team changes, it's no longer trustworthy, or they're no longer investing effectively, or the stock may have gotten really, really, really overvalued. Those are the 4 key reasons why I would sell an investment. Most of the time, if I'm looking at a business, those things don't really change very quickly, but they do change every now and then. Of course, management, I think, is probably one distinct area where you can look at that. Companies go through massive management changes all the time, and sometimes they go from having a great management team to having one that just isn't really trustworthy. The next question here from Investing with Tom is, biggest new investment lesson learned in 2021? Wow, that's a really good question. I kind of already knew this, but I was kind of amazed to the extent that it happened this year, which is that markets can stay irrational for irrational and extremely long periods of time. And I kind of knew this. I think it's a very common phrase. It's used by Warren Buffett to suggest that you shouldn't ever short an investment because, which means to bet against an investment. And that's simply because the investment can stay irrationally high far longer than you can stay solvent in a short position. And I think we've really seen that over 2021. I think there is so much insanity going on in the markets right now in terms of IPOs, the number of IPOs, the businesses behind these IPOs, where a company has a $100 billion valuation and pretty much produces nothing and is already missing guidance, already missing their expectations. They couldn't even produce, I'm talking about Rivian here, they couldn't even produce the 1,600 vehicles or whatever it was that they said that they would this year. So I think the level of craziness and stupidity that I'm seeing in the markets right now has really blown me away, even though I kind of already knew that we should expect things like this to happen. The next question here is, how did your investing passion start and how did you let it grow? Happy Christmas. Merry Christmas to you too. My investing passion really started around when I started going to university to study finance. That's when I really kind of discovered how interesting investing was to me. And in terms of how I kind of let it grow, I think you've just got to, when it comes to something you're passionate about, you've just got to kind of let it guide you. You kind of got to, I think, just go with the flow of what you're interested in and just see like how far down the rabbit hole you end up going. And that's really what I did with investing. I started off just buying a bunch of books and reading the ones that I found particularly interesting and sticking to the investing style that really clicked with me. And for me, that was value investing, value at a, growth at a reasonable price. I think is kind of the mix of growth and value is really where I sit. Modern style Buffett investing. That really kind of clicked with me as soon as I learned about that, and so I just continued going down that path. I didn't decide to learn about every type of investing strategy. I didn't learn anything about technical analysis, short-term trading, anything like that. I just went down the value investing rabbit hole and went as far as my passion has driven me, which has been quite a while. So that's kind of how I went about it. I don't know if there's anything else I particularly did to kind of let it grow, except kind of, I guess, the intention to continue learning all the time and, having a habit of just, staying involved every single day so that you don't kind of let the things you've learned go away, or you let your passion kind of die, or anything like that. But just follow your passion and just go with the flow is my advice. The next question here is, how do you come up with conservative growth rates for companies other than looking at historical growth? Yeah, I think that's a really good question. I mean, yeah, I think looking at historical growth of things like profits, I think it's a very limited way of approaching valuation, because while it's true that some companies will grow in a similar way from the past to the future, for the past decade to the next decade, there's a lot of companies that don't do that. And there's very good reasons why you should expect some companies to severely grow, a lot slower than they did over the past decade, whether it's in relation to the industry growth slowing down, or even just, a limitation on their ability to scale at that point. I mean, think of something like a restaurant or a retail business. Of course, as time goes on, there's a limitation on how many physical stores they could open up, for example. And that makes, that's kind of less relevant in this e-commerce age, but that's kind of just an example of how you would expect a business to grow slower over time. But the way I go about projecting growth instead of looking at past growth is by figuring out what the key performance, key business indicators are for that business, what's driving the business forward, what drives revenue, and make a projection of those things. So for something like Facebook, you can kind of do it in relation to the number of users that they have and how much revenue they produce per user. And you can think about it in terms of how much growth, how much runway do they have in terms of user growth, which is obviously going to be quite limited, let's say, for something like Facebook. And then what is the runway in terms of average revenue per user? And then when thinking about average revenue per user, and this is where your understanding of the industry and the business and the market is going to come in, I can look at Facebook's average revenue per user. I can think about how many ads the average person who's going on Facebook, let's say once every day, how many ads they're likely going to see. And I can figure out quite quickly what ad rates that Facebook users or what people advertising on Facebook are paying in relation to other types of ads that are less effective. And through that process, you can see that Facebook's average revenue per user is extremely low. It has a significant opportunity to continue growing even as user growth slows down. And that's how I think about it. And then from that, I can come up with an estimate of what revenue is likely to be in the future within a range, because of course, I'm not an oracle. I can't predict exactly what it will be, but I can pick within a reasonable range. And from there, I can figure out whether I'm willing to invest in the company today based on where I think it will be in the future. And then the last question for this Q&A video, don't worry, I'm gonna get through a ton more questions in next week's Q&A video, but the last question for today is, what is your take on highly acquisitive companies that make a lot of acquisitions, do a lot of mergers and acquisitions? My kind of overall thoughts is very in line with Warren Buffett's thoughts on this, which is that it's very difficult for businesses, or for a management team, I should say, to make good investments, good acquisitions constantly. So most of the time, businesses that do grow based on acquisition, they experience short-term growth because, of course, just by simply buying another business, that simply adds revenue, adds cash flow most of the time to the business. So the business looks like it is growing, but what typically happens is that the business is not very effective in their investments, the return on invested capital declines, and the actual organic growth, which is what drives the business over the long term, is not very good. Think of it this way. If a business buys another company that's, say, the same size as it, let's say it merges with a company, right? Then you could say immediately that approximately the revenue of the company will double, right? Let's just use very simple terms here. So immediately it looks like the business has, become much larger. But then over the long run, what will drive that business even further forward, or even, forward at all, is whether the business they've merged with or acquired, whether it fundamentally is strong. If that business fundamentally is in decline, if revenue is going down, or if it's just a bad business, then over the long term, the overall business will do very, very poorly. It will have bad return on invested capital. It won't grow. And that's what you see with most companies. So most of the time I don't, although the big caveat to that is that I have a significant investment. In fact, it's my largest investment in Thor Industries, and almost their entire strategy is acquiring other RV companies. And this is where there is an exception to the rule. Occasionally, there are businesses where they have a strong management team that has an extremely effective strategy. Thor Industries essentially acquires really good RV companies that have great products, but don't have the scale in order to operate efficiently efficiently in order to operate profitably over time. So what Thor Industries does is they come in, they say, we will acquire you. You can continue to operate independently. We're not going to change the management team. We're not going to consolidate you into our larger business. We're not going to steal your products. You will operate as an independent RV manufacturer. The only difference is that you now have access to our cheap materials that we're buying at massive scale because we are 40% of the RV market. And that strategy is extremely effective because it simply means that they can look for small RV companies, offer them an amazing deal, which is basically a huge margin improvement, and they can continue to operate independently. There's a great interview with the CEO of Thor Industries talking with the CEO and founder of Tiffin, which is one of the RV companies they recently acquired. And you can just see how happy both of them are to be in this deal where Thor Industries simply provides them with low-cost materials and that sort of thing, basically provides them with the scale efficiencies while they can continue to operate as an independent family-run business. So this is a long answer to the question, but just to overall summarize that answer, most of the time, especially if you're just getting started with investing, I would avoid businesses that have a history of doing a lot of acquisitions. They're very difficult to assess, but that doesn't mean that every business that grows based on acquisition is bad. There are exceptions to the rule. There are management teams that are very, very good at doing it, and it will often be unique to the way that the industry functions. So with that said, we'll wrap up today's Q&A video there. I hope everyone got some value out of it. As I said, we'll be back next week. I'm going to be taking a break off, but I'm going to schedule another Q&A video and another video in for next week. So there'll still be content coming out next week while I take a little short break. So let me know your thoughts down in the comment section below. I hope everyone has a happy Christmas and New Year's. I don't know why I'm saying this now. There's going to be another video that comes out. There's going to be more videos before Christmas. So I don't know why I'm saying this now. But anyway, I hope you have a nice Christmas and New Year's. And with that said, hope you guys have a great day. And I'll see you in the next video.